Van.
All kind of slides.
You're in Van?
I got called out at 3, so I can go home.
Whatever Carl tells
Mr.
me.
Sooner.
I got 5 minutes.
Sooner.
Hey, Faith, have a seat.
Mr. Sooner. You have to get called out.
You have to get called out?
Yeah, do we or just go if we don't want to go to the pep rally?
You should go to the assembly. School doesn't end until 3:20. All right, chapter 3, take 2. Thank you. Objectives. Is that like you have to leave personally? Do you have a pass?
No.
Well, then I just can't take a text message. Because
That could be anyone.
that's not how it works. Please. Band dismissal, 2:45.
Yeah, cheerleaders are dismissed at 2:40.
Cheerleaders are 2:40?
Yeah, I'm a
Yeah,
cheerleader.
I'm a cheerleader.
For real? Okay. All right. Identify county concepts, recorded in general journal transactions to set up a business, record in general journal transactions to buy insurance for cash and supplies on account. Record in the general journal transactions that affect owner's equity and receiving cash in account and start a new journal page. Terms. A journal. If you go to your study guides, you can follow along with these terms to make sure that you get those down. A journal is a form for recording transactions in chronological order. As you may have noticed on the T accounts, it was a little crazy when you're putting the dates in to find out where everything matched up with everything. To find the credit, find the debit. Find the debit, find the credit. This journal puts everything in alphabetical order, makes it look nice and neat, puts the accounts next to each other that go together. Journalizing is actually recording the transactions in a journal. An entry is information for each transaction recorded in a journal. And a general journal is a journal with 2 amount columns in which all kinds of entries can be recorded. And eventually here we're going to get to what a general journal looks like, but we are going to continue with some more terms. A double entry accounting is the recording of a debit and credit parts in a transaction. And a source document is a business paper form which information is obtained for a journal entry. You ever go to the store, you get a receipt?
Yeah.
Yeah, okay, Faith does. That's great. Nobody else goes to stores to get receipts. That's weird. That is a source document. If you would take that home, you could use that for your checkbook or use that for your own records on what happened in that transaction. Some other business type source documents. You have a check. That's a business form. Ordering a bank to pay cash from a bank account. That's a technical term. Cash is this what people write, to buy something. A check. Check is the same thing as cash in accounting. Whenever you paid cash or wrote a check, that's the same thing. It's cash. An invoice is a form describing the goods or services sold, the quantity, and the price. A sales invoice is an invoice used as a source document for recording a sale on account. A receipt is a business form given written acknowledgement for cash received. So a business gives you a receipt. That's the written acknowledgement that they received money from you. And memorandum is a form on which a brief message is written describing a transaction. You will see all those types of source documents as we get into transactions. Are you ready for what a general journal looks like? A general journal looks like this. So on a general journal, you have different columns. You got a date column. Everybody know what the date is? Put the day the transaction happened in that column. The account title, that's the account that's affected. Debit and credit, you put the dollar amounts in these columns. So if it's a debit, you put it in this column. If it's a credit, you put it in this column. Document number is where you got that information from. So did you get it from a receipt, a memorandum? What did you get the document from? How this looks. Steps. First step. These you might want to either memorize or think about or write down or however you can process these steps. But step 1 is the date. And what I will do is write them on the board so that we have them here to refer to if we need them. And they will be in much shorter terms. 1, date. So you write the date. Now notice, this general journal has 2 columns for the date. In the first column, you're going to write the year and the month. The second column will be the day. Now, if you're working ahead, that's fine with me, but please try and pay attention, because if you miss this kind of stuff, it's stuff to go over again, unless you view this video, then you can see it again. Which will be on my website, by the way. Which you have a business card that should take you to their website. Okay, so that's the first step. Second step is the debit account. One huge rule about the general journal that you will learn here is that the debit account always goes first. The debit account always goes first in the transaction. And then you would put the debit amount in the debit column. Okay, so in this instant, cash is debited $5,000. Third step. Okay, bounce out of there. There we go. And there we go. Third step is the credit account and amount. The credit account always goes in the second line of the general journal. And then always in the credit column for the money. So Kim Park Capital was credited $5,000. Does that make sense? Is this a transaction you're used to seeing?
Yeah.
Kim Park invested $5,000 in the company. Cash goes up, debited $5,000. Kim Park Capital goes up, credited $5,000. It's just writing it a different way. So all the transactions you've seen in the last 2 chapters, you will see again in this chapter. We're just writing it in a different way, different form. Notice, big key here too, is that the credit is indented. I did not do that on purpose. I did that on purpose. It is indented just a tad. Oh boy, it started all over again. Sorry about that. It is indented just a tad as compared to the debit account. The reason why we do that is just to make it look nice with the credit and debit in the dollars. So the debit and credit columns on the right, one of them's to the right, so we just indent the credit so that it matches up with the number. So if you're looking at a general journal, you can tell what the numbers and the accounts are. So indented, just a little bit. Step 4. Source document. That's what you put in that document number. Source document is where did you find out that Kim Park invested $5,000 into the company. And it tells me here that it's a receipt number 1. R1. So you kind of abbreviate that number. We'll get into that in a little bit. So those are the 4 steps to completing a general journal transaction. 4 steps. Not that big of a deal. Yes?
Can I turn off the air?
Yes. Questions on the 4 steps? Oh, you gotta be kidding me. Did not have to go again?
Just go back and go to the next slide.
Great idea. Yep, come on now. That's what it looks like when you get done with the slide. All right. We're going to talk about receiving cash from owner as an investment. Sorry. On August 1st, we received cash from an owner as an investment, $5,000, receipt number 1. That's what we just did. August 1st, date is on there. We do the debit account cash, the debit amount $5,000, the credit account, Kim Park Capital, the credit amount $5,000. Paid cash for supplies. If we paid cash for supplies, $275 with check number 1, we're going to put a new transaction in here. And you'll notice, once you have already put the year and the month in, you do not need to do that for every transaction. You just have to put the day. So I skip August in 2012 and I put the 3. Okay, 4, paid cash for supplies. We should know, or we should have the understanding that when we purchase supplies, supplies goes up. When supplies goes up, that's an asset. When assets go up, they're debited. So we put supplies first, debit 275, then we know cash is credited because cash is going down. I got 2 people in this whole room smiling. Not sure what's going on. You're just enjoying accounting. That's great. It's great to hear. Okay, cash is going down, which is a credit. So we put that on the second line and indent it ever so much. And then it tells us check number 1. So that's C1 in the document number. Is that difficult? Is that not making sense to people? How this form looks and works, the general journal.
What's the one in between the debit and the document thing?
This one?
Yeah.
Post reference. We will get to that in the next chapter.
What? Is R1 and C1 written on the receipt, or where is that written?
The R1 and C1, we just take abbreviations from what it tells us in the transaction. So basically, if it's a receipt, it's R. If it's a check, it's C. And then it'll tell us which number, what the number of the document is. Or if it's a memorandum, we'll put M.
So the thing that goes up always has to go first?
Not necessarily. The thing that is debited goes first.
Oh, okay.
But it doesn't have it. Oh.
Debit can go down on liabilities, on owner's equity, and on sales. Remember our fingers? The 3 in the middle, the debit goes down. Good questions. Remember the hand I did? You were talking to those 2 over there. You guys were like laughing.
We were writing on our hand.
You were laughing about some video.
I know the hand thing, it's assets, then liabilities, then owner's equity, and then revenue and expenses.
Good job.
Well, same as
Oh,
Anna and I were.
Gotcha. So we'll review. In what order are transactions recorded in the journal? Are they put in there like by how much money the transaction is? Are they put in there alphabetically?
By the date.
By date. They are put in there chronologically. Chronologically means the first goes first, the second goes second. So sometimes, while we're doing transactions on paper, I don't know how it's going to look on the computer, but people would skip a transaction, like the 5th. So they'd have 1, 2, 6, 9, 10, 12, 15, and they're like, oh my gosh, I forgot to do the 5th. Is it okay if I just put it at the bottom here? Most of the time I'd say yes, because it's an honest mistake, but in the real world, you have to have them in chronological order. What are some source documents? Or why are source documents important? Why do you think knowing or having the receipt or the memo or the invoice are important?
Because you need it.
How about if I'm the IRS or the government and I come into your business and I'm like, hey, where'd you get this $500 from?
Like proof.
And then if they go, oh, we sold some shoes. We sold shoes for $500. Oh, really? How do I know that wasn't illegal merchandise that you sold? Because I just told you we sold shoes. They don't take your word. You need a piece of paper that says, look it, on September 21st, yada yada came in, bought $500 worth of shoes, here's the receipt. Boom. Thank you very much. So it gives evidence that the transaction happened. Evidence is very important. Can you list the 4 parts of a journal entry? The order, the 4 things, 4 steps?
Date.
What's the first one?
Date.
Date. What's the second one?
The title.
Account title.
Debit.
Debit.
The debit account and the debit amount.
And then credit.
And credit.
Then the credit account and the credit amount. And last,
Source.
source document. It's on the board right there. I think that's what they were looking at.
What else if you put it in wrong on the computer?
Like the order?
Yeah.
Yes, if you put in, like if we have this transaction